Welcome to the weekly market wrap-up. I'm Hannah Bernard. Focus shifted away from the Ukraine crisis and all eyes were peeled on the Fed meeting minutes that took place this week. Janet Yellen spoke for an hour, but markets only heard 3 words, which spiked an initial sell-off on Wednesday. Although markets made slight gains on Thursday, we have to ask, what will impact markets more? Fed speculation or the ongoing crisis in Ukraine and the recent referendum? Let's get to it. U.S. stocks reversed post-Fed losses and finished the session on Thursday with modest gains. We saw the S&P end the day up 11.24 points. The Dow Jones regained most of its losses, regaining 67% in value to close at 16,331. And the tech-heavy NASDAQ gained 11.68 points on Thursday to close at 4,319. Turning now to Canadian markets, Canada's main stock index, the Toronto Stock Exchange, gained ground on Thursday, up 27.79 points to close at 14,361. The TSX Venture Exchange fared worse as we saw it close at 1,035 on Thursday, down 3.61 points. The release of the monthly Federal Reserve meeting minutes threw markets for a loop on Wednesday as investors digested the news of possible interest rate hikes following the end of QE tapering. Janet Yellen, in her first press conference as Fed chair, addressed the issue for over an hour, but markets only heard 3 words, around 6 months. That is, after which, according to Yellen, interest rates may begin to rise. This is sooner than expected for markets. The Fed also said it would cut its monthly purchases of U.S. Treasuries and mortgage-backed securities to $55 billion from $65 billion. While it was the Fed that caused concern this week, the crisis in Ukraine was not far from investors' attention, as geopolitical tensions grew again following the Crimea referendum to join Russia. The vote passed by 90% and triggered another round of sanctions by the U.S. on Putin allies. As tensions continues to increase, the crisis in Ukraine could have serious implications for energy and industrial markets. So when asked which could impact the markets more, the Fed or the crisis in Ukraine, we believe the crisis, as the Fed is somewhat predictable. However, Putin clearly isn't. Turning to precious metals, gold took a huge hit this week as it capped on Thursday its biggest 4-day drop since November. After rebounding from last year's disaster, the yellow metal dropped this week, due in large part to interest rate statements by the Fed. However, some analysts predict that the fall lacked substantive physical selling and was simply an adjustment for a stronger dollar. Silver prices also took an even bigger hit on Thursday, with May silver losing 47 cents or 2.2%, and it closed at $20.43. Now over to winners and losers in our picks for the week. The winner for this week is Astrom Biosciences Incorporated, ticker symbol ASTM. Astrom shares shot up over 25% this week after investors finally decided that the stock reached bottom and is now attractive for a long-term position. The company is currently trading with a market cap of only 21 million on a basic share count of 6.16 million outstanding shares. Astrom Biosciences is the leader in developing patient-specific expanded multicellular therapies for use in the treatment of severe chronic cardiovascular diseases. The loser for this week is CATO Corporation, ticker symbol CATO. Shares of the women's fashion retailer plunged nearly 13% on Thursday following the release of its 4th quarter earnings report. The company reported a net income of $3.8 million or 13 cents a share. That number does not compare well to the $7.9 million or 27 cents a share it reported in the prior year quarter. Founded in 1946, CATO Corp operates retail stores located in the southeastern United States in a variety of markets ranging from small towns to metropolitan areas. Well, those are our winners and losers for this week, and now it's time to check in on the gains you could have locked in by following the weekly watch list from Robert James and Viral Stocks. That's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earnings reports are coming out next week. Here are 3 U.S. stocks to watch. Starting off on Monday, we have Chesapeake Granite Wash Trust with an estimated forecast loss of 64 cents. On Tuesday, Carnival Corp is out with an estimated forecast of a loss of 8 cents. The cruise line announced its tapping design icon, Adam D. Dehaney, to create luxury guest areas for a new ship being built in Italy, and it's due to launch in 2016. Finally, on Thursday is Cons Inc. with an EPS estimate of 78 cents compared to 54 cents in the prior year quarter. Now checking in on Canadian stocks to watch next week. Starting the week off on Monday, we have Alliance Grain Traders Incorporated with an EPS estimate of 33 cents compared to 19 cents in the prior year quarter. Alliance recently purchased Quebec food firm CLIC International, an ethnic and traditional retail food packager and canner and food service distributor. Next up on Wednesday is Argonaut Gold Incorporated with an EPS forecast of 2 cents compared to 18 cents in the prior year quarter. And finally on Friday, BlackBerry Limited is out with an EPS forecast for a loss of 53 cents for the fourth quarter, compared to a gain of 22 cents in the prior year quarter. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel and find us on Facebook and on Twitter. For Viral Network News and BayStreet.ca, I'm Hannah Bernard.